please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, for now, the markets are absolutely flat, but in its 21st acquisition, Motherson Sumi has now bought out the European company Reydel Automotive through its subsidiary SMRP. Reydel manufactures interior components for global auto customers. Lakshman Sehgal, the vice chairman of Samvardhana Motherson Group, joins us now on the phone line to talk about that. Laksh, hi, good morning. Can you tell us a little bit about the Reydel acquisition? What's the rationale? And more importantly, how are you planning to fund it?
As you know, Motherson always goes after acquisitions based on the customer's behest. Reydel Automotive is an established global supplier of instrument panels, door panels, console modules, cockpit modules, so quite focused on the interior space. So we have paid, we are paying an equity price of USD 201 million for 100% stake in the target. This target was previously owned by Cerberus Capital. And we have executed the transaction documents for the proposed acquisition of Reydel Automotive. This deal is expected to be EPS accretive from day one. We have existing credit lines able to fund this entire transaction and don't need to go after any other source of financing. And we believe that it's a very good fit for Motherson because it increases our exposure to different customers and gets us closer to the 3CX15 formula of no customer, no component, no country being more than 15%. And with this acquisition, no customer in the muscle pro forma of the combined entity will be more than 15% of the business because they have a strong focus on the French customers where SMRP is not present today. So we're quite excited about this acquisition and we welcome Reydel to the Motherson family.
Okay. Well, we understood that the cash on the books is $65 million, right? That's included in the deal.
Yeah, so the net cash position is 63 million as of December 2017, and this does include that amount of money in the books.
Okay, that's good to hear. The revenues for Reydel have been steadily growing over the past 3 years. What kind of growth rates can we expect in future, Laksh?
This acquisition of Reydel, of course, brings in a lot of engineering capability that Reydel has, together with SMP's portfolio and Mate's portfolio. We believe we have a substantial offering to the car makers in terms of engineering capabilities for interior products. Reydel is quite focused on the interiors of the car, so they have very good technologies there. It would also increase our footprint into countries where we are not present, like the Philippines, Indonesia, Croatia, Morocco, Argentina. These are all places where Motherson is not present today, but Reydel is. And piggybacking on Reydel's footprint in these locations, we're able to now offer solutions to our customers that are over there. And likewise for Reydel too, piggybacking on Motherson's locations around the world, they're able to service their customers better with locations that are already there. And we believe that the engineering fit, like I spoke about before, is a very attractive one for the car makers. We have gone and met each and every customer that they're supplying to, and each one of the car makers have been very, very positive about us coming together and are quite excited by the growth opportunities that the combined entity will have.
Okay, so in the press release, you do mention that there is EBITDA, it's EBITDA positive, the company, and we've talked about the revenues, but is it also a profit-making company at the bottom line?
Yes, it is a profitable company.
Okay, so what are we looking at in terms of revenue growth for Motherson next year? You've given us the FY20 target, but next year, what do you think you could do?
Yeah, you know, Sonia, we've always maintained that we have big growth targets, but for us, top line is vanity, bottom line is sanity, cash in the bank is reality. The top line target is only there if we can see a good path to a 40% growth. Just like with this asset that we have bought in Reydel, we believe that the growth at starting day one will be 25%, and we will, be working to get it up to 40+%. So we believe that there are such opportunities like this available in the market, and we will go after them only if they make sense, and there is a path to that 40% growth. So we're quite focused on the bottom line, and that's where the whole group is gearing towards. And hopefully we will have other opportunities as well. And if we don't have it in the meantime, then there's no issue of letting go of that top line target if we're not able to give the bottom line.
Okay, no, I got that. That's a great line. Top line is vanity and bottom line is sanity. Okay, what's the Reydel market share in markets like Philippines, Morocco, Argentina, where apparently they have a large presence?
I'm not able to give you exact numbers because there are different product groups that they have. But to give you an example, it makes the product offering of Motherson, the interior space, quite large now, together with Reydel's $1 billion in top line. But also there's significant room to grow because all the customers that we have gone to have been quite happy of the combined entity coming together and have already shown us some opportunities for growth. So it's not concerning to the customers. Also from an antitrust basis that we have to file and get approval of in the next 4 to 6 months, we believe that it should sail through and make the product offering quite strong.
Okay, since you said you're going to be funding it through internal accruals, can you tell us what will be the debt on your books?
So to talk about the target, the target has very little debt on it. So there'll be really no change into Motherson's position. The gross debt on the book of Reydel is 25 million. And like I said, the cash on hand that they have is somewhere around 88 million. So it really does not change much over there. Even the multiples, if you look at the 17 multiples, the EV to EBITDA is under 2.5. So it really there's no change to the debt number, and we believe it's a very positive acquisition that we made.
All right, the market likes what you have said, and you can see the stock rising. Thank you very much for joining us with all those details on the new acquisition, Mr. Sehgal. That's Motherson Sumi stock up a further 6% today after that fairly decent performance yesterday as well. Okay, that's the word on auto ancillaries. Now let's move to another segment which actually even Deepan and Sonia alluded to. The highway segment. The National Highway Authority of India has awarded 7,400 kilometers worth of bids in FY18, significantly higher than the average of the last 5 years, which was just around 3,500 kilometers. Deepak Kumar, chairman of NHAI, now joins us. Mr. Kumar, good morning. Thank you very much for joining us. Now, FY18 has been very strong, but what will your target for FY19 be? Can you maintain this kind of a growth rate?
The ministry will be fixing that target, but we are hoping that it will be around 8,000 kilometers.
Oh. The problem is that FY18 had started really slow with more than 50% awards happening in the last month of the financial year. Now in FY19, should we expect accelerated start, or do you think the annual trend of a slow start is expected to continue?
This year it will be a change scenario. The last year actually Bharatmala project was announced in October. It was approved by the government in October. And in November, under Bharatmala, we had been given some delegation of power. The NHAI board was delegated, the EPC power whole, and there was further delegation from the NHAI board to the NHAI officials. So we started our tenderings only in November. And we had target and November, and we have to give 45 days time for the tendering, then for the processing. So almost all the tenders started being finalized in the month of February end, say second fortnight of February, and then March. So that was due to that reason. But this year we hope to achieve not less than 4,000 kilometers in the first 3 months.
Oh, that's very strong, sir. But can you tell us what was the construction like for FY18? Was it over 30 kilometers per day? And what would you target for FY19?
Total target for construction was 3,500 kilometers. And I am talking about the total complete road length. When you break up into the lane kilometer, it will be much higher than that. So we will be achieving that target of around 3,500 kilometers this year. The next year the ministry will be fixing us for fixing us the target, and it will be around 4,000 kilometers, or it will be more than that.
Oh. Okay. You earlier mentioned the tender for the next set of toll operate transfer projects will be floated in the month of April. Can you give us an update what's happening currently there?
You are aware that the first tranche was already bid out. The second tranche we hope to achieve in April end, and it will be of the same size, almost of the same size. approximately the same amount, same number of roads, except that it will be geographically located in some other states. Maybe eastern side we are targeting now, West Bengal, Odisha, etc. we are targeting now. So the only difference will be of that, the geographical location. Otherwise, the size will be almost the same, almost the same.
Oh, okay. Mr. Kumar, earlier you had told us that you have a target to spend 90,000 crores in the road sector in FY18. Can you give us an update on that? What was spent and what is the plan for FY19 in terms of expenditure on the road sector?
Target set was 90,000 crores, and we don't have the figure of the March, but till February end it was 71,000, much more than what we had spent last year. It was last year till February it was just 38,000 crores. So we had spent around 70,000 crore by the February end. We hope that it will be achieved. 90,000 crore would have been achieved in March, but the exact figure I don't have just now. In the next year again we are targeting around 1,20,000 crore. It is a quantum jump from what we had achieved this year, and we are doubly sure that we will achieve that expenditure also, because by seeing the pace of awarding and seeing the pace of the work being started in this financial year, we will achieve that.
Okay, I also wanted to talk a little bit about the NHAI IPO, because the recent comments that we got from the finance minister, at least what reports indicated, he did suggest that the road minister's idea to bring the IPO of NHAI is sensible. Any update on that?
I don't have any information as of now. But one thing I will just want to say before before the audience, that the pace of awarding, the pace of construction has shown that there is an appetite for in the financial market. There is appetite for highway sector. I will just corroborate by the facts that in this awarding of 7,400 kilometer, around 3,400 kilometer have been awarded on HAM. And HAM, you are aware that the initial funding comes from the private sector. So approximately the 3,400 kilometers cost is around 76,000 crores. So out of that, we expect that 50,000 crores will come in the first instance from the private sector. So that's the commitment which we are getting from the bidders, that 50,000 crores we will be getting from the private sector by financial closure from the banks. And also in the HAM bidding, we had got generally very competitive rates, generally. But the majority of the bids have gone below our bid price. So that also shows that there is a intense competition in the financial sector for achieving those tenders. And this is a very positive sign for us. Besides the TOT.
So you're basically saying you're not facing any constraint at all on the finance space?
At least in highway sector, we are not seeing. Maybe it's a surprising thing for us also, but we are not seeing it as of now.
Good to hear that, sir. Thank you very much, Mr. Kumar, for joining us with all those details. I think that's a very, very bullish chairman of NHAI, the number of kilometers that they're expecting to construct in the last year. Actually, in the next 3 months itself, they're expecting to bid out about 3,000 kilometers. Okay,
so that's the road space. But let's get back to the markets, right? Because although the index is flat, there are plenty of stocks that are moving around quite a bit. Delta Corp has once again topped the charts. It had hit a bout of a slowdown in the last few days, but now Delta Corp is up about 6% looking pretty good over there. Motherson Sumi, of course, is your big stock moving around, but PSU banks also picking up some pace. Ashwini Gujral, Mitesh Thakkar and Rajat Bose back with us. Ashwini, for now, you're not getting a real trend. I mean, it's just flat for the index. What would you do? And in terms of the banks, PSU banks particularly, anything that you can trade now?
See, first of all, it appears that there is short covering now happening on ICICI Bank, and that's what's holding up the bank nifty. So, people who are short from yesterday, etc., could even buy, because the moment you get some positive news, this is going to run up, because the shorts are probably a bit uncomfortable on ICICI Bank because they are not getting further dope on the short side. Having said that, today HDFC Bank and Kotak are down, and maybe money is moving back into some of the corporate lenders. So that could be the big trade for the day. Also, Tata Motors seems to have started a fresh leg of the rally, and that could in fact take the stock back to 420, 430. So that's another oversold stock that people can look at. Also, Yes Bank is moving up strongly today. It's had large declines. That's a buy with a stop of 308, target of 324. ICICI Bank is a buy with a stop of 2. And State Bank is a buy with a stop of 246, target of 262.
Okay, that's a bunch of banks on your list, Ashwini. Mitesh, good morning to you yet again. Do you have banks on your list?
State Bank of India like that.
Oh, okay.
I think that's reversing and showing a positive chart pattern. So keep a stop at 246, look for a 263, 264 kind of a target. And Apollo Tyres is another one which is making a fresh high. Buy with a stop at 274, look for targets of 290. It's already moved up in the last few minutes, so try to buy it around 278, 279 mark.
Okay, gentlemen, thanks for joining us. Rajat Bose is also with us to give us his views on individual stocks. Rajat, hi, morning. What are you looking at in terms of stocks today?
I'm looking at 1 sell call and 2 buy calls. Apart in that, I have chosen CEAT as a buy. April futures 1548 is my stop loss, 1595 and 1609. These are the two targets for CEAT. Actually, if you look at it, tire stocks are doing pretty well. Apart from that, I would suggest Motherson Sumi is a buy, 350, 353. These are the two targets. 335 should be the stop loss. And McDowell has already started moving down. I earlier placed the stop at 32.85. Now it can be brought down to 32.73. And the targets would be 3227 and 3195. McDowell generally falls on the second day after a big run.
Oh, okay. That's helpful. Thank you very much, Rajat. Ashwini, before we let you and Mitesh go, Delta Corp, I know it was discussed earlier, but is this showing the beginnings of a bottoming out and an up move?
See, it collapsed quite a bit in the correction, and right now it's at its 200-day moving average. So I would think that a lot of mid caps are bottoming out, and this is a good day to get back into Delta. And whenever the mid cap rally resumes in the right earnest, you'll probably see 375, 380 coming back here.
Okay, and neither of you mentioned Bank of Baroda. Mitesh, you want to take a jab at that?
Yeah, I do like it. In fact, I was considering Bank of Baroda as one of my calls. Okay. It's been doing a range of about 146, 147 on the upside, about 130, and it's just breaking out of that 147 range. In fact, it's just trading there. So maybe if it starts getting past 148, buy this one, keep a stop at about 142 and look for a 165, 170 kind of a target. So I'm quite positive here as well.
Okay, by the way, the stock that's surging now in the broader markets is MRF. It's hit a new high today. It's almost approaching 75,000 rupees MRF, and that's a fresh all-time high. And the market cap of MRF has now surged above 30,000 crores. So great move seen in that stock. IndusInd Bank also, by the way, has hit a new high today. So don't lose sight of that. IndusInd Bank is now above the 1800 mark.
Tire stocks, I think Mitesh had Apollo and Rajat had CEAT. So it looks like tire stocks generally are on the up move. Ashwini, you will want to add anything to that list?
See, they are moving up, but they're not moving up on a consistent basis. So every other day they move higher. Maybe it's the market, but stocks which are moving up consistently and hitting new highs, those are the first choices that you need to have.
What about a stock like IndusInd Bank? Slowly and steadily, it's now crept above that 1800 mark, Ashwini, new highs over there. Do you think technically it deserves more?
See, it's very clear that people are differentiating between HDFC, IndusInd, Kotak and the rest. So, this is money that's coming out of all the corporate lenders and going here. So chances are it should, move up further, maybe 2100, 2150. While ICICI Bank, State Bank, you'll get news flow, they'll go up and down. I think this is a more consistent upside candidate.
Okay. And finally, I know Ashwini discussed NBFCs, but Mitesh, we didn't discuss them with you. It's not a bad day for Indiabulls Housing, Bajaj Finance, Canfin Homes, PNB Housing Finance, DHFL. Anything in the finance space? Non-bank finance?
Yeah, so I think, DHFL is something which I like. It was doing a range of about 523 to about 490. It's just breaking out. And above 535, I expect further strength and a test of around 565, 570 levels. That apart, I had a call on Equitas in the morning. I think if it starts getting past this 148, 149 zone, then look for a 160 kind of a target.
Okay, gentlemen, thanks for giving us all of those stock ideas. By the way, the mid-caps are picking up some more pace now, so it's not such a bad market after all. As we slip into a break, let's give you, our viewers, some good news. Your wait is now over. The market leader in business news is now available at your fingertips. CNBC TV18.com is coming soon on your phones. Always stay connected with CNBC TV18.
Stay up to date with the latest market and financial news with CNBC TV18.com. It's coming on your iOS and your Android devices. All the important news, videos, data and analysis at the touch of a button. The clock struck 10 and we need to know what's happening in the commodity space. Manisha Gupta is joining us with a roundup. Morning again, Manisha.
Thank you for that, Lata. Well, trading steady when it comes to the crude oil prices after that 3% decline overnight. Remember, which came because Russia output is at an 11-month highs for the month of March, and Saudi Arabia also is looking to cut the prices for the Asian consumers for the month of May as well, which is the 4th month in a row that they would be doing that. But a bit of a support that you see on the screens is ahead of the US weekly inventory numbers. That would tell you on what the direction the prices will take, depending on whether you have seen a build-up in inventories or a drawdown. The gold and silver prices, well, they gained overnight by nearly a percentage point, but we haven't seen that follow-through buying come in. So Asia actually has gone into a bit of a profit-taking there, while the weakness in US dollar has been supportive. But markets still analyzing a lot of global cues that are coming in on your hand right now, starting right from the global trade wars, the crude oil prices, which also have gone in for profit-taking, does tell you that the immediate inflation concerns perhaps may not be so strong, and that's bothering that space. The base metal prices, surprisingly, have continued to gain well, but then we have been telling you that this quarter, the second quarter of the calendar year, usually is a strong seasonal demand period, and that has been supportive. The Chinese data has been on the positive side as well, and with China, a couple of provinces there cutting steel output and other host of other commodities until the month of November also has been supportive for that space. Having said that, it is going to be the US non-farm payroll data on Friday. That is a number that the markets will take direction from. Trading strategies, we have them from Grow Value. They have a sell call continuing for many of those metals. Zinc, they expect the prices to decline up to 211. They have a sell on copper as well, where they expect the prices to fall all the way to 431. A buy call, though, continues for the crude oil prices, even as we have seen a dip there. Upside targets at 4,180 for the day today.
Okay, thanks a lot for that. So big moves coming into crude, but big moves across the globe as well. Trade wars have definitely intensified. We saw the US markets under quite a bit of pressure yesterday. Adrian Movat, the emerging equity market strategist, joins us now to tell us how to approach all of this. Adrian, hi, good morning. Always a pleasure speaking with you. How do you think emerging markets will move? The last year, 2017, was a really good year. 2018 has not gotten off to a good start. You think things could be a bit volatile this year?
Definitely. I mean, they are volatile, aren't they? We've had, since markets rallied nicely in the first couple of weeks of January, we've had a series of corrections, some reasonably big falls on a daily basis. With, again, that coming out of the US with the moves that we had on Monday. I think a number of things have changed, which are very important. If you go back to 2017, it was really a story of better macroeconomic data across both the developed and the emerging world. And in January, we were probably at peak optimism around that. We followed through with really some concerning policy issues. The US economy was robust. They've added to that a big fiscal boost with the tax cuts. You do that at a time when the Fed is starting to raise rates, and the probability that they have to raise rates faster increases with the tax policy. You then add to that the fear that the Trump administration has got less moderate voices in it with the changes that we've seen in that administration. And I think the prospects for economic activity in 2019 look less favorable than economic activity this year. And that seems to be what markets are pricing in. Within the emerging markets, I would also argue that China is probably moving to a slightly more tighter, less pro-growth policy. And we've also got a series of political events to consider in the major emerging markets, with the most recent one, or the one that that's about to come up, being the Mexican election. But we've got Brazilian elections, and at some point we'll be starting to talk about an Indian election as well.
Yes, sir. Good morning, Adrian. Always good to have you with us, which actually brings me to the India question. India has been a relative underperformer vis-a-vis other Asian markets in FY18, in 2018 calendar. But the last 2 days, we have seen some outperformance. Where would India figure in the pecking order now for the rest of 2018 for you?
Yes, so I think the factors that were hitting markets that would translate from US markets into emerging markets were twofold. There were the issues around the likes of Facebook and Amazon. Those would then translate into people selling down the Chinese ADRs, such as Alibaba, also Hong Kong listed Tencent. As we've seen redemptions in tech funds, they tended to have more of an impact also in places like Taiwan and Korea, where you will get a strong correlation with the semiconductors, the tech hardware names from the US into Korea and Taiwan. India hasn't suffered from that same issue of correlation. And so I think it's often the situation that when you get corrections, that the market that's been a bit of a laggard will outperform a little bit in those corrections. I'm reluctant to read anything else into it at this point. I can't identify an India-specific story which would justify the outperformance over the last 48 hours.
Can you read a little more of this tech sell-off? You know, there was this whole Facebook issue and now this Donald Trump tweet on Amazon. Are the FANG stocks only falling for noise that will be transient, or are they peaking off? Because if that leader peaks off, then there is trouble in the entire index, Wall Street indices.
Yes, you know, we've seen this pattern over the last couple of years that passive products, exchange-traded funds have become a very significant part of the inflow. In the developed world, you've seen very strong net inflows into passive products while there's been net outflows from active products. When you get the big index constituents being hit by specific stories, that leads the index lower, which increases the probability of redemptions. And then you get a follow-through effect in the market, as you were alluding to just now. I do think for the likes of Facebook, and I'm the emerging market strategist, not a developed market tech strategist, but I think Facebook's model is challenged, and that's a model that's fed by advertising, and the appeal to advertise on Facebook will have been hit by the reputational damage on the use of data. And I also think that Facebook users will be a little bit more cautious, a bit more cynical about the platform. And so I can see that hitting growth rates. It's very difficult to judge, what motivated Donald Trump's tweet around Amazon and the U.S. Postal Service, and whether that will have a medium-term impact on Amazon.
Sure.
So yes, for Facebook, less so for Amazon would be my interpretation.
Okay. Coming back to the argument on India, Adrian, we've seen a bunch of scams in the banking space that have hit us over the past fortnight or so. Started with the Punjab National Bank, and now even ICICI Bank is being questioned for loan disbursements, etc. As a long-term investor, how do you react to all of this? Because so far, the preference was for private sector banks and PSU banks were being shunned, but now things are changing a bit. How have you reacted to all of that?
Well, I'm not really sure that the preference is changing here because, those that took a risk, so buying a lower valuation PSU bank, have been hit by these scandals. And so that, the general rule to have stuck with the more expensive private sector bank would have been more defensive in this environment. I think also in that you started with the Punjab National Bank fraud case, and now we're seeing alluded that there might be other issues in the PSU banks and the quasi-PSU banks. I don't think that's an environment that would make me want to invest at this point in time. I'd really like to see a bit more detail coming out of this. And there is still the whole issue of, is there sufficient capital in some of these PSU banks at this point in time? So in a more cautious environment, you tend to just have to pay up for quality.
Yes, certainly there is a worry that all the capital is going to get eaten up for provisioning and not much will be available for growth. Point taken. Thank you very much, Adrian Mawat, for joining us and parsing the global environment for emerging market investors and for Indian investors. We need to take a break now. When we come back, we're going to dissect another set of numbers that we got yesterday. The GST collection data, which looked very good, better than previous months and better than the previous announcement for February.